Good morning, Paul Georgie from Allendale. It's May 10th, 2011. Well, we've got the grain markets higher here overnight, and would expect that that could continue here into the open outcry session at 9:30. The news yesterday afternoon, the USDA released the planting progress report. A surprise in somewhat of sense, because they said we got 40% of the corn crop planted. Trade was looking for anywhere from 33 to 35% on average, but did a great job of planting in the state of Iowa. 61% in 1 week planted. They had 8% a week ago, 69% this week. Nebraska got a lot planted as well. They went from 15% up to 57% on corn plantings last week. And it looks like they should be able to continue that pace at least until later in this week, when a storm system moves through that could drop some moisture through the western corn belt. The eastern corn belt, however, on the opposite end of that spectrum. Ohio, Indiana only got about 1 to 2% planted this past week, which brings them to 2 to 4% planted on total. So well behind the pace in the eastern corn belt. Weather forecast is going to dominate the traders' ideas and willingness to accept risk here in the next several days, as we anticipate some drier weather for the eastern corn belt and the Ohio Valley. But will it be enough in order to allow some planting progress to occur? So those are the things that we're looking at down the road. We've also got a USDA supply-demand report that'll be out tomorrow morning at 7:30. The anticipation there from the trade is that we will see an increase in ending stocks in old crop corn and old crop soybeans, with a tightening potential in new crop corn and new crop soybeans. So those are things that we'll have to watch very closely. The reasons for this is that they're looking at crush numbers, for instance, in soybeans have been down. Export numbers have been down, so could see an increase in ending stocks for that reason. Corn, same way. Exports have really dried up here in the last 3 to 4 weeks. Ethanol production is been on a weekly basis has been below expectations. So anticipation there that we may see that ending stocks increase a bit in the old crop corn number. The soybean plantings, not a big deal, but 7% planted versus 17% on average and 28% a week ago. In the wheat market, a lot of numbers there on planting and crop conditions. Planting progress of spring wheat, 22% versus 10% a week ago, and 65% average. So well behind pace needed there for a normal spring wheat crop. And also data coming out of Canada showing that the Canadian prairie has only got about 3% planted versus a normal percent there of 28% or higher. The wheat number, expect the wheat crop to tighten as the winter wheat conditions dropped again this last week, went from 42 to 43% very poor, and took 1% out of the good to excellent category. So the winter wheat crop continues to deteriorate, mostly because of the dry conditions in the southern plains, and some because of the soft red winter wheat grown in southern Illinois, Kentucky, and basically the Ohio River Valley, which has been extremely wet. Concerns over disease and drowned out and so forth in that crop. So not any ideal conditions anywhere in the grain markets right now, in the production areas anyway, here in the Midwest. We've also got Europe that is continuing their dryness they're not really calling it a drought at this point, but dry conditions, especially in Germany, is causing some concerns there and prompting support for this, the Paris milling wheat, which is also giving support to U.S. and the Chicago Board of Trade wheat here this morning. The livestock trade, cutout values for beef up 5 cents, select down 23. Cattle, with the weakness that we've seen in cutout values on Friday and a lack of any bounce here early this week, would suggest that we're going to see lower cash cattle prices this week as we move forward. Supply continues to be excessive. Competition at the retail counter from pork and poultry is taking away some of these specials for beef. We've also got weekends that are just not giving us the incentive to have barbecues, cookout season in the metropolitan areas such as Chicago and New York. So that is weighing on the beef demand as well. And also the technical action in June cattle has taken out support and looks to be heading toward this 106 area that Rich Nelson in our office has been forecasting as a target for some time. The pork complex, a little different picture there. We've got an increase in cutout value, 47 cents yesterday. Technically, we've seen a tremendous amount of funds selling last week, and it's taken out key support areas. But since last Thursday, we had an outside day up on Thursday, and on Friday and Monday we've traded on the inside day. So what that does is sets us up for a technical move here. If we break out one way or the other, it would suggest that we have a significant move in that direction of the breakout. So something to watch very closely, and stay tuned to Allendale's research to give you some ideas there. We wish everybody a very successful trading day. You can reach us at 800-262-7538, and we'll talk to you tomorrow morning. Thank you.